What is it? It's Freaky
Fri-
Friday. What do we call it?
No, it's
Free for
Friday
all.
free for all. Come
Free for
on,
all.
Freaky
CDO.
Friday.
Free
The
for all.
CDO thought he was shilling a coin. He thought he was shilling
Yeah.
Ben.
It's ICO Friday. Not really. We could do that every Friday, launch a new ICO and see which one takes. But no, we've got a lot to talk about today. But before that, Jarrett, I want you to finish this story. Jarrett was telling a story of his developer friend because it's tangential, but I think relevant to the state of technology. So retell the story. So what was this conversation at?
Yeah, so Grant was just saying, hey, how's everyone doing? And we were kind of checking in. And I had posted a little brief thing on Twitter, but I think I'll put up a video later. And it was with my buddy Andy, and he already recorded on More Than Blockchain episode 62, where we were talking about AI. I really don't know much about AI from like a technical standpoint. He does. He's been in and around it for years, and I thought it was like less time, but it's also like, how do we define AI was something we talked about in the episode, because I made a blunder by saying he's only been in it for a couple of years. He's like, no, I've been around it for 5 or 6 years. But what we call AI and what we think is AI are sometimes two different things. And we were just talking about, he looked me dead in the eye, and he was with his wife, and they've already talked like very seriously about how they're going to manage the future, because while he's a developer and he can code in multiple different languages and he's brilliant and this is his job and he makes good money and all this, he uses ChatGPT now. And on the episode, you'll hear a little TLDR. He says it makes him 40% more productive. And he showed me a video. He showed me a series of him with prompts and with all the plugins he's got in ChatGPT and leveraging some other things. And he's like, this thing took me 3 hours yesterday to do, but it took me 2 full 8-hour days for me to like personally write out. And he's like, the other thing about it is when I did it by using ChatGPT, it felt like play. So you've got 16 hours down to 3 hours. And he says it's actually more enjoyable because he now feels like he has a team. And so he uses this all day to basically become a better coder. And he's actually creating a chat bot for his company, which is crazy, using AI to create more AI. And he's just looked me in the eye. And when, he lives in this apartment and I drove over and he walked me out and we talked for like 20 minutes under the cover of night, and just kind of like, he was like, dude, I'm worried, like if I only have 5 years and I have like a very well-paying job and I have a hard skill, what's going to happen? What is going to happen? And the thing we spoke about briefly, and this is not on the episode, but it was like, and I posted this on Twitter, the AI will create jobs that we can't foresee, right? That will happen. This is what technology always does. But the problem is we're so aware now, because the pandemic showed us that most people in the United States, never mind the rest of the parts of the world, let's focus on the quotes most wealthy country in the world, only have a month, if that, weeks amount of money. Massachusetts, people get paid every 2 weeks. So a lot of people only live for every 2 weeks.
Yeah, paycheck to paycheck,
paycheck to paycheck, literally. And if it's month to month, that's fine too. But if you are in a transition and you have to learn a new skill, first of all, the whole idea of upskilling and reskilling people is just a myth. It's something that people like to say, but humans just aren't that flexible. As he says on the episode, technology is elastic, humans are resilient. But to get people to kind of wrap their heads around new technology, the bottom line is, if it takes everyone to go take a Google course, a Google certificate, learn some new stuff, and let's say that takes 4 to 6 months, which I actually think is a reasonable amount of time to learn some new skill and feel comfortable enough to even know when you're wrong. That's when you know a skill. That it just takes too long. And people are going to end up on the street before they figure it out. And we just don't have that time. And one of the questions I asked him on the episode, and I hope you guys tune in the episode, because like this episode just blows my mind. I asked him, I said, what sector of work? Because what he was talking about, prompts and sequences, and how the whole entire thing with AI is just sequencing. And in life there are sequences. A lot of people are just middlemen or women or companies, and they're just part of a sequence. But when you take those out, what happens? And this can be millions of jobs. And I turned on the news last
chain entirely, not just that one spot.
Exactly. The chain looks different. Like whatever you thought was the way of the road is actually different now. And so, and then you put this all in perspective, and I get home and the news, you look at the news, and what's the news? It's worried about 2,000 jobs in Florida and $1 billion loss to Ron DeSantis locally in Florida because he and Disney are fighting. And Disney says, well, screw you, we're not going to do this development. And that would have brought in $1 billion of revenue into the state. And it would have,
Headlines, bro. It was already on the chopping block.
I know. This is all
Okay.
political theater,
Okay.
but the point
Got it.
is,
Yes.
you have the pundits on the news because
Yes.
basically jobs decide elections. People basically
Yeah.
vote for who they think is going to bring the most jobs. And AI doesn't care. AI is
That's
not a
right.
Democrat. It's not an independent. It's not a Republican. It's just technology, and it's moving forward at the speed of light. So while CNN and Fox News are complaining about 2,000 jobs, which is a percent of a percent of a percent of a percent of the overall labor market in the United
Sure.
States,
Yeah.
AI is probably going to wipe out millions over the next 10
Millions. Yeah.
years.
Yeah. That's true.
And it's not something you can vote out, right? You can regulate it, but like, it's technology. So these things are going to continue to happen as people find more productivity. So anyways, it's a very interesting inflection point. And I combine everything he says, which I'm still like trying to wrap my head around, with what we know and we talk about on this show, which are like the economic conditions, the failing global currencies, what's going to happen to the dollar? Are we going into a recession? So all this happening, and I just say it's quite a time to be alive. And so thanks, guys, for tuning in.
Aussie
and listening.
squirming. Aussie, why are you squirming over there?
Because this discussion is coming up more and more often. I had this discussion on crypto consensus with the 100x podcast 3 months ago, and I'm just thinking to myself, I'm sitting on 6 months of savings. I can survive for 6 months. I get paid every 2 weeks, but I could survive for 6 months if I lost my job. But yeah, the number of people living 2 weeks to 2 weeks is insane. And yes, there are training programs, but what I often find, especially for older workers probably in the 50 to 65-year-old range, they don't upskill, they downskill. So they'll go from...
I've heard about the downskilling right now, especially like not only is there tech disruption in jobs and firings, there's also tech unhappiness, and they've downskilled to blue-collar jobs in this kind of hipster dream of blue-collar work.
Not necessarily hipster dream of blue-collar work. If when we're talking about that, that's like the 20-year-olds. There's the 20 to 25, like that's happening. But when we talk about downskilling, it's my dad's worked in pharmaceuticals since I was born. And there's been tons of layoffs in pharmaceuticals over my dad's career. My dad's been laid off a couple times and shifted companies, but there's one guy that my dad worked for, and he was 50, 55 when he got laid off. Didn't have enough for a retirement package. He was too far from retirement. So instead of trying to find another job in pharmaceuticals, because he's a white guy, he couldn't get, and he's a 55-year-old white guy, he couldn't get hired. He went into construction.
Wow.
He's a guy with a bachelor's degree in...
But the trades are paying pretty well too now, right?
Well, yeah, trades are paying well, but we're seeing more and more people, rather than, upskilling to become a coder or something like that, these older gentlemen and women are going from, hey, I was doing decent middle management job potentially at these different companies, and I've been cut. I'm going to go work construction. I'm going to go work. They're working lower, what we'd consider lower skilled jobs.
Yeah. And so while we were talking here, what I'm looking at over here off to the left is I Googled really quick what percentage of Americans, narrow scope, but Americans are living paycheck to paycheck. I imagine this number is dramatically higher in any other non-global West country. So like if you just pick the global South or developing or developed or up-and-coming countries, this number is probably a lot higher. As of January 2023, this is a Lending Club poll survey. And then I'll give you a range that I'm seeing. It says 60% of U.S. adults, including more than 4%, living in 10 high-income categories, are living paycheck to paycheck. Now, this apparently is down 4 percentage points from January 2022, which is a small change, but not negligible, right? The 4% is almost, or 4 points is almost a 10% drop, almost. And it suggests that that was cutbacks that have occurred since the pandemic in the United States, people tightening their belt. But I have seen numbers that range, and a quick survey of like CNBC did a poll in April, 58% of Americans living paycheck to paycheck. And then the Motley Fool of Fool.com did a poll in February 2023 that said 64% living paycheck to paycheck. So you're looking anywhere between 58 and 64% living paycheck to paycheck. Quick math on that. There's what, 300 million Americans or 400 million now?
It's like 350, I think.
350. So we're talking.
Yeah.
Let's just call it 60%. I don't even know. What is that number?
I'm
10
pulling it up right
He's
now.
doing the math. That is
35 by
not a
6.
negligible number. And I think we need to
It's
pay
over 200 million people, yeah.
Yeah. I mean, that's
210 million.
210 million people. Now, did also want to make this quick point. You know, for anyone who's watched the show, we know that like if we've got a Bitcoin maxi and we've got Canada's top American commentator over here, Aussie.
America's top Canadian.
I'm a little bit of a real estate maxi because of one additional aspect that's relevant to this conversation. And I've said this comment before, but I think it makes more sense in this context. My wife and I try, though we don't always succeed, to live equity event to equity event. And the richer people I know live equity. I mean, the wealthiest people I know, they have negligible income. They might get a normal salary, but to their income needs, it's largely negligible. But most of their life is done equity event to equity event, which is approximately 14 to 18 months is when they see, and what that looks like often is a new home equity line of credit or a new unsecured line of credit. Because they've set up income streams on the real estate, now they can reasonably say, okay, let me open up this line of credit. I'll go spend money on my trip to Monaco that my renters are paying for. And so that spread tends to become more and more realistic. So during times like in the pandemic, we were very fortunate that we had, it was just before the pandemic actually, that we had an equity event. And whether that's buying or selling property doesn't even matter. Sorry, a little background noise. It's an equity event that comes in. Grant, do you have your pop filter? Oh, sorry. Hang on real quick, guys. Let me mute real quick. Go ahead and take the conversation.
It's interesting, and because you've always got the argument that real estate, essentially everyone will always need housing, which is true, except you run into the problem of what if your renters can't pay rent? And then,
you're right, Aussie, and that fell apart in the pandemic, where then people couldn't get people out, and they still had to pay their mortgage, but the renters stopped paying them. So then what? And I kind of wish Grant was on to talk about. Yeah, I kind of wish Grant was on to talk about, because a lot of cities like New York City also at the same time had do not evict, like no eviction things happening, and then it was tough. Grant, Aussie brought up a good point. Aussie, do you want to run that back?
well, like I like real estate. We've talked about real estate quite a bit, Grant, you and I. But my biggest kind of question, and I mean the biggest argument for real estate is that there's always a need for housing. But if there's such a massive job layoff that your renters are not paying rent, then what do you do, especially if we get into a situation like the pandemic where there's no eviction orders in most or many states and cities?
Great question. Have you ever actually gone through or observed the process of being foreclosed on?
I haven't been in that.
So that process typically on the low end is 6 months long.
6 months.
6 months.
Wow.
So that if I have a renter who's not paying me and I cannot pay, my mortgage company, 9 times out of 10, that just to get it really going is about 6 months. And chances are they'll actually have a ton of programs, and they had this during the pandemic, a ton of bridge programs for real estate owners, because the U.S. economy especially, but many others, developed economies, are built for real estate land holders, which has its own intrinsic societal biases, but that's the way it is. So a lot of the bridge money that came out in the pandemic was specifically for banks. Why? Why is that?
Because
Because
banks had loans from to mortgage
people like
holders in
me.
real estate like
So
you.
the trickle down economy comes to me, not to renters.
Yeah.
And
We had some
the
rental
people,
programs in Canada, but not
yeah.
not nearly as many. We
And
had
admittedly, there's tons of grift at every step of the way, admittedly. But if it were between someone who has a DeFi lending program and they were living on the equity that they borrowed from, say, for example, staked ETH, and they were trying to emulate this rich guy life where let's say you had 100K in ETH and 100K in equity. And both of us took out a loan for the same amount, call it 80K each. And I decide to take my trip to Monaco, go to Iceland, upgrade my wardrobe a little bit, and pay for groceries for the next 12 to 18 months on some of that. And the person with ETH does. And the market goes down. We both are getting screwed. People aren't paying their rents to you or to me, and your DeFi is upside down. You're just shit out of luck. I have every mechanism. Every mechanism you hear about in the headlines will ultimately come and give me a higher probability of a safety net. So, and I can call the bank and say, well, hey, I mean, you can talk to your banker and be like, hey, this is what's going on. The fact that DeFi has such trustlessness is a bug, not a feature. It's turning into, it started as a feature, but we're starting to realize in the human dynamics compared to other investment means, it's actually a bug, not a feature. Because I can call my banker and appeal to them and say, hey, listen, you know I got 5 properties. You know that I'm good for it. And you know the market's just tough. And you know that the whatever government is in, they're going to try to bridge the landholders. So it's a tough thing, but we could do hypotheticals all day long about losing money to DeFi and
absolutely.
and
It
other
was just
areas.
more of a question, thinking
Yeah.
about the millions of
Out of
Americans and
work.
Canadians that be out of work. Even, and I mean,
It's a real concern.
yeah, it's a real concern. I mean, a lot of them potentially own their own homes if they're in that top 4%.
Yeah.
If they're in that top, but if not, you've also got, you know, there's probably a few markets that are going to be more heavily affected. You think of the Bay Area, and you
Oh,
think New York
devastating.
City, you
Devastating.
think Seattle. I think those probably are three major markets that probably wouldn't like, they would probably be most heavily affected because
Oh, yeah.
that's coder heaven right
Oh,
now.
yeah. Well, and you know, there's a lot. I mean, we kind of touched on economics, and I'm going to skirt politics on this. People can feel some kind of way about Florida right now, and worse, right? Like it's worsening our reputation in the world. You can feel some kind of way. That's great. As an investor, bro, I'm staying put because in terms of resilience in a real estate market, it's nuts. I can't think of it's hard to imagine a more resilient place because our property values relative to the rest of the country are still relatively low, except in like Miami, right? And on the coast. And so yeah, as you're looking at this market that will inevitably George Pate's like, wait, what's happening?
Yeah, I
Yes,
just sent
George.
George. I just sent George the link on LinkedIn because I wasn't able to invite him, and so he's like, "Is this live?"
And I would say George is probably in the second most resilient area, except he's in Austin and he's in Houston.
He's outside Austin,
He's
so
outside. Well, I mean,
yeah.
that place is going to get affected a little bit. But I think that it's an important number, Aussie. But, you know, me and my people, we're like, hey, hashtag instead of when Lambo, hashtag when recession. You
I
know,
would love to get into real estate. I'm, as your top Canadian American commentator, however we want to call that.
yeah, man.
Yeah, I'm, as much as I'm a crypto maxi, I'm a real estate maxi. I think there's still major pieces to be done in real estate. Yeah, I've heard
Rural
Texas.
Texas. How has
I've heard
rural Texas been affected?
Yeah, I'd love to hear George actually speak on that.
'cause
George is out.
I've heard
George has
prices about
farmland.
Austin are falling pretty hard because of what's going on just overall in the economy. That's because Austin was one of the biggest markets to pump during the pandemic. So
I mean, it's still pretty high. At least when I was there, people were talking. I sat with Vanessa and her husband, Vanessa Gutierrez, who's always watching our show. So she watches our show and she just like sends a bunch of likes and hearts, but we never see that. We can't see that on this side of Restream. But
No.
she was saying that, yeah, her and her husband, they tried to get places in and around downtown or in and around the more ritzy parts. It was just out of control.
And Jessica Yang, Oh, yeah. Okay, here we go. Here we go. Everyone wants to live outside the city. Okay, so rural Austin. So we're talking about suburb Austin. When you said rural, George, I'm thinking like cattle land, and I think those get affected by entirely different cycles than what we're looking at. We're talking about with tech. Um, but we've gotten into real estate, we've gotten to the economy a little bit, but I don't want to miss some of these points because what we're talking about is the disruption of AI. Layoffs are one thing. Do you think that this will send us into a recession when the AI tsunami disrupts these jobs?
I
So go, Jarrett. Go
no
ahead.
go Aussie, go.
Okay. I think it sends us into a divided recession.
A divided
This is
recession. Explain.
this is exactly where I was going to go, Aussie. So
So
continue.
anyone who owns companies, who potentially owns land and real estate, who are in positions where their work is they own the work or they manage the work that will be basically done by AI, whose workers are being replaced by AI, they'll be fine. They'll be sitting nice and pretty. They'll be sitting on fat profits because AI has just made their cost of service next to nothing, and they can just continue charging what they're charging. But then you've got anyone who's in a position where they might be affected by layoffs related to AI, and that bottom 2/3 of the population goes into a deep recession because
Interesting.
there won't be enough hard labor jobs for people who just need to downskill because they
Yeah.
don't have the skill, they don't have the ability to upskill. You've got the people who are kind of stuck in the middle, who are competing for those, what maybe the few jobs that are kind of created by AI to potentially be like managers for AI and doing the prompts because they're that skill level. And then you've got a whole bunch of people that are left in the middle who essentially are out of luck. They're competing for whatever scraps they can find, whether it's working at the grocery store as a cashier. And I mean, they're being replaced by self-checkout machines in
Yeah.
most places.
Rapidly.
So
Rapidly.
um,
I can't tell you
Yeah,
how many fast food restaurants here are like robot only, except like the person handing it out the window. What were you going to say, Jarrett?
yeah, I was going to go the exact same place Aussie went, in a similar direction, but maybe a little bit differently. In that, I think we have to redefine how we're going to call a recession. In a lot of
Yeah.
dystopian movies, you have one max corporation that basically owns all of the technology, and they're fine. So maybe the productivity or the GDP is fine from that particular region, but then no one has, and then we'll get to George's comments, but then no one has work. So like I can totally just see a world where we get used to like 6 to 10% unemployment, but the US is continuing to be one of the most wealthy economies, GDP per capita. And those are two different things. Normally we lump them
Yes.
together. We're like, oh, the economy must be good because the labor market's good. And it's like, no, our productivity should increase so much that we may have 10% unemployment, which would be catastrophic. And that's like got that high in the pandemic in like April of 2021. But
Yeah.
we may also be at a place where our money, our GDP, our GNP is so high that it's not considered a like economic recession, although it is a labor recession in the sense that people just
Interesting.
can't get work. And I
Yeah.
think that that is going to be a divergent thing that we'll see as we dive deeper into tech.
I mean, we're already seeing it now. I
We are.
think if you look at the labor market right now, we're actually in an inversion of that. We're seeing a economic recession, quote unquote, but we're seeing the labor market's fine overall. If we look, we're at some of the lowest unemployment numbers in U.S. history, at least since the 70s, and but we're seeing GDP trend at a lower level um, than what we're normally seeing, where we're seeing below 2% GDP growth, and so
Interesting.
we're seeing an inversion of that, and we're already seeing a correlation of labor and GDP. And so I think we're going to continue to see that. And I think when we talk about recession, we'll be talking about a labor recession rather than an economic recession.
Interesting. George says cattle land and farmland is way overpriced, albeit in the Austin area due to people wanting to build out subdivisions. So they're speculating their own land. This drives the price of food up. The families no longer produce crops and sell the land off. Actually, this isn't just Austin. I've seen this in and around the citrus industry in Indian River County on the east coast of Florida. So I've seen this before.
It's happening farmland everywhere.
Everywhere. We must have people step up to fill this gap, definitely. And then he does mention AI will definitely push people back to physical labor jobs. And Canadian homie, you're describing the Hunger Games, but then he says this, which is really good. Productivity can increase until we lower our use of needless repetition. Hopefully AI will drive that. A lot of times when we talk, guys, about like recession and jobs numbers, and we think, man, this is so bad. This must be bad. But then I think about Elon doing the Twitter purge. And from a guy like Elon, like him or dislike him, think he's overhanded or underhanded, whatever you think, doesn't matter. He believes that he had needless repetition in jobs. He would walk through and be like, what do you work on? And someone's like, I don't know. And then the same thing at Meta. They fired about 11,000 people. And some of those very employees said, we were literally paid to not work. They just didn't know what to do with us, but they wanted to tie us up so that other companies couldn't have our skill sets. Needless repetition. So in terms of like humans being a natural species that maybe overstaffed on one end and is now purging, is this that bad for the species?
That's really hard to answer, because if you're talking about how we as a species evolve and everything like that, I mean, there's so many considerations. I'm an environmental scientist. I've done a lot of genetic work and looking at that.
What the hell, Aussie? How have you done genetics?
We studied evolution and genetics, especially around smaller species, insect and bird species, particularly throughout my bachelor's. But I mean, considering humans, there's too many factors, because economics aren't really genetic coding. It's
correct.
Depending
on which theory you follow,
how you eat, or how much, like, if you are able to upskill, Grant, because of your brain elasticity, to therefore guarantee that you can eat, your family eats better, and therefore you can have children in this quote unquote scenario, then yes, maybe we could see how the economy could favor people who can upskill or brain elasticity over time. But that's not necessarily purging jobs that are repetition. Doesn't really necessarily mean that we're upskilling or helping the evolution of humanity.
Sure. Jarrett, you had the latest interview with an AI specialist. Do you believe we as a species are waiting to be led to the next step, or will AI do that? If it's AI's pointing it out rather than another human, does the human ego react differently to the criticism? This is super philosophical, but go ahead.
Yeah, George, this is a good question, and I'm just I'll answer this more on my own rather than having just talked with Andy, my now AI specialist. He, AI is just a rocket ship. AI is just a Lambo. AI is just gonna get us to wherever we want to go next quickest. Now, there is the singularity where then AI decides where we go, but I don't know if that's exactly what George is touching on right here. But AI is just like the internet, and those that had access to the internet, it's like Jared Diamond's Guns, Germs, and Steel, if you've ever read that book. So I think Jared Diamond needs to come back out with a new one called Guns, Germs, and Steel and AI, and just focus on AI and just start to look anthropologically who has access to AI before other people. Because if you have access to the internet and someone doesn't, then your life is going to be completely different. Your worldview is going to be completely different. Your ability to understand things is going to be completely different. Your earning potential is probably going to be completely different.
It's absolutely completely different. It's
I'm not even saying better or worse. I'm just saying it's going to be different. And if we think about the difference between over 6 months, someone who has access to the internet and someone who
Yeah.
doesn't have access to the internet,
Yeah.
let's say that that's 10x difference.
Yeah.
AI is 100x, if not compounding every day at 10x.
Yeah.
So then that ends up being like, I don't know, 4 trillion x over 6 months. And it's just like, yeah, I'm trying to make the analogy that like, it's like, let's go to the store. It's 10 miles away. You have a skateboard and I have a car.
That's exactly.
AI. That's AI. And it's just going to help us to get to wherever we are. I think humans are still going to lead the way. But
Yeah.
the problem with that is we know that humans inevitably are, we can be greedy. We can be power hungry. We can search for things. We can be profit driven. We can leave our ethics at the door. We can have a price on our head to do things that maybe aren't the best for the planet, aren't the best for other people. And if we use that, if dictators use that, one of the things that Andy did say on the podcast, he's like, yeah, we should all be really happy that Mao did not have AI, that Stalin did not have AI. He didn't say this, but like that Joseph Goebbels didn't have AI, because wow, what they would have done. So
Yeah.
I don't think that AI is necessarily going to show us the future. I think it's going to allow us to get to the future that we wanted, that we may want quicker than we thought we could even 4 or 5 months ago. And like the example I'll give is, and this is not necessarily AI, but more tech. James Cameron had the idea for the Avatar movie in like the late 90s.
Yes.
And he had the whole thing and he just couldn't do it. We just
Yes.
didn't have the tech. He had to wait almost a decade, if not more. He had it in the
Yes.
early 90s. And then when the tech caught up to his vision, he was able to do it.
Yeah.
Well, now AI is going to allow us to catch up to our vision quicker than a decade.
And
So-
surpass it. You know,
and surpass
so
it.
I sent you a video back in the day, and for those who have not seen this video, I highly recommend it from the perspective of this conversation. It was a TEDx talk, and I mean first generation TEDx talk by a researcher, anthropologist, and analyticist by the name of Hans Rosling, and he studied developing worlds, and his whole premise of his talk was identifying different species within the human species based on their ability, how they vacation. And he profiled a Chinese family that might take their bicycle on a vacation. They might put, a mother on one bicycle, a father on the other bicycle, and one kid on the back of one kid on the back of the other. And that's how they vacation. And then you go to the developing world, the in-between world, and they might vacation by car. And it's a once-a-year thing that they really make the time and pay for the gas and vacation by car. And then Americans or Westerners at large, or the global north, vacation by plane, no questions. You have not gone on vacation if you didn't get on a plane. And a lot of these young people's paradigms, you get in a car and drive to the coast, and the kids are complaining because their friends flew to Paris or even just flew to the Rockies or something like this. It's a minimum standard. And then, if you guys recall, yesterday Elon posted his tweet was simply this: I have spaceships. And he was expressing this sudden dawning awareness that I like someone has a Lambo, someone has a helicopter, and I now have a spaceship. And I think in our lifetime, the three of us, we will have the option to not necessarily vacation on Mars, but to take a SpaceX vehicle that will hop from here to Hong Kong in about the time that it takes us to hop on a plane. And that will be an affordable way for us to actually vacation. And so what you're talking about, Jarrett, is now you've got that metaphor. That's a living metaphor for what you're talking about with AI, that I've talked quite often about. Haiti is making progress as a country. I spent about 5 years working in and around Haiti. And it is making progress, but its role on the global platform is stratified. It's permanently in its status. And as America goes up, they might go up a little bit, but while we'll be using AI, they'll just be getting everyone online, excuse me. But then you throw AI, and now it goes like this. And the gap gets wider and wider because of this 100x metaphor you're using of, oh my gosh, like I just launched a product this week that I'm selling to people. And if you have a small business and do not create content at the pace that AI can help you create content, in 1 year's time, you will not rank on Google. Which means you don't exist as a local option. What were you going to say, Aussie?
That the stratification is 100%. Like it's not even within just country to country.
Yeah.
But within Canada, the US, that's literally what AI is going to do. I think I've talked about my father-in-law on this show before, but they still don't have high-speed internet. They've got maybe
Wow.
5 megabit per second, and they're capped at 50 gigabytes of internet where they are.
Wow.
And the earning potential and the access to information and everything that they have compared to just someone like I'm 15 minutes from them and I've got high speed internet.
Wow.
My earning ability just from sitting at home and talking on this podcast
Yes.
is 50x what
Your
he's
face is
capable.
seen by, like, I'm telling you guys, like, I just had a client yesterday, get this, and Jarrett might appreciate this because you've dabbled in this as a 1099 contractor. I'm a fractional CMO on with a company, and we met yesterday, and part of my job is to shame them into recording video. And they recorded their first video yesterday, and they posted it, and I shared it. And guys, I'm not kidding. People are like, "Oh, these guys are open." These guys have been open for 15 years.
No way.
No one has even known, or this strata. And so what you're talking about, for someone to take advantage of this and to be able to, whether it's use high speed or have their face seen, our faces being seen here is due to the fact that we have a degree of high speed internet. Haitians can't post a live like this at that, the average rural Haitian can't post a live like this and get their face known. And it seems trite. It seems, you're talking about influencer bullshit. No, we actually exist more real to other people, to shoppers who are looking online. So your point is 100% valid. Your visibility, this is a leverage point. And with AI, it's nearly unfathomable for me. And I sell these services. I can't imagine how unfathomable it is for someone who's like, should I have a Google business listing? And it's like, bro, come online. But, we've been rapping on this, guys. We haven't even touched on crypto yet today.
Yeah, I was gonna say let's go to crypto.
Let's go to crypto and how crypto can mess this up and take this to a whole other level.
Did you guys? I dropped you that tweet. I want to see if Elon sees it, or I just want to see if Frank D God sees it, essentially. But I took the screenshot. Elon says I have spaceships, and Beach Hills, a good buddy of mine, said I have a D God, and I'm just interested to see. I posted this morning, and a lot of the D Gods community is West Coast, so hopefully we'll see in the next hour or so.
There are levels to the game. Go ahead, Aussie.
I'm totally gonna go retweet that. That is friggin' amazing. I love it.
Yeah, there are levels to the game, and I don't know if they're going to disrupt technologically. I don't know if crypto's going to do it, but it will disrupt, I think, sociologically for sure. So what do we know is going on in crypto, and are these 37 cryptos legitimately being targeted by the SEC?
So
I'm going to pull up the link and drop it in the comments real quick. Go ahead.
Yeah, pull up that link. I mean, some of them have already been targeted by the SEC. Some of these are like very clear, like there's already ongoing enforcement actions or enforcement actions that have already occurred against them. Cases that are closed even. But we're also, I think there's a huge chance that this is also related to other kind of definitions that we talked about on Decentralized News about 3 weeks ago or 4 weeks ago, just in terms of how they were charging different exchanges. And so some of this is them grabbing a bucket and seeing what sticks. And that's at least how we described it. So
some of these are quite dramatic, though.
Some of them are very dramatic. Some of them are either expected or some of these are things I've never heard of. So all across the board.
So real quick, George Pate says, I was having a side conversation about all the scams going on in the industry from mining to Web3 to blockchain. Listen, I know we love to hate on Gary Gensler. I know that those of us in the Web3 space, the crypto space, I know we love our memes, and memes look for a target, right? People who love memes, we look for a target to generate the next meme. Here's my question to either of you. Don't we need this? Don't we internally want more regulation?
not
No,
through
Jared's like, whoa.
regulation, not through regulation, through enforcement. Regulation through enforcement is probably the dumbest approach, the most web zero approach to regulating an industry and providing clarity, because you're talking about, hey, something was good 3 months ago. So and so got charged with this. They're
Mm-hmm.
and but no one had said anything poorly about this practice beforehand. And now I'm being charged with that. And now that my case is solved, they're charging 4 other people with kind of the next step up from what I was doing. So now what I was just doing was illegal. Now this new thing that no one else knew was illegal is now illegal. And you're just based on these court cases. And so that's kind of impossible. It's an impossible environment for anyone trying to build anything to build comfortably in, because what am I allowed to do? Right now, there's
I mean,
no clarity.
it's just not promise returns, right? Like you can't
Well,
promise a
no,
return.
it's more than that now. It's more than that now. Now, if there is a group of people that are leading the project or leading a token, more and more they're saying that makes it a security.
What?
And
Can you say that again? Can you say that again?
if if a token or a project has a clear, basically, direction team, a team that is leading it, they're more and more likely to be considered a security if they list a token.
I've never heard that, because that would mean that Ethereum should be up there too. I mean, they have
no,
like
because the reason why Ethereum is not is because there's now decentralized teams that work on new upgrades for Ethereum. It's not just the one team, and there's dApps being built on Ethereum that aren't being built by the Ethereum team. So that's why, at least the argument that I've heard around Ethereum is that's why it hasn't been so clearly called out by the SEC yet. The reason why Sushi Shop is being targeted is because they've got a head sushi chef. So they're pretty clearly there's someone in charge, and therefore it is a security of some kind.
What's the name of that one? Because I don't see it on the list.
Sushi Swap. They're not on that list, but I know where this list was pulled from.
Because I could not find it.
I've got to go. Let me go find it in my over 100 pages of show notes from Decentralized News, and I've got a good idea of where this is pulled from. This is from one of the exchanges that they charged.
Well, and that's the thing. Like what I've been doing is I've been actually on the the SEC's website, and I use their search function. And I just look for references: Algorand, Ripple, George Pate, and Sushi Swap, and they don't come up in any of the documentations, at least not the formal documentation. So maybe it's the exchange that you're talking about or whatever. At the time, I do want to call out George's comment here, if that's okay. The marketing scams people use in this industry is great. It's like watching 90s TV marketing all over. It blows my mind coming from an auditing background, because the people that do this always get caught, in his opinion. Do you think, is crypto different? Because we have the safety of anonymity, which I don't believe we do, but I still think it's the Wild West to a degree, where it's just so hard to track down who's saying what with what team, and can we keep up with the tsunami of projects that are coming and going and rugging people? Will the bad actors actually get caught, or just the worst actors?
Wait, Austin, before we change subjects, I want to stay on the SEC thing a little bit longer.
Oh, please.
I agree with Aussie that forced regulation is just kind of like bullying. It's just saying we make the law and now you have to adhere to it. And somebody was asking me about this regulation the other day, and it's like, look, I have a healthy appreciation for rugby. I think it's an awesome sport. but I don't know it well enough to change the rules. I don't know it well enough to regulate. I don't know it well enough to like change the parameters in which it's engaged in. And that's what the SEC, that's how it feels like for crypto right now. The SEC doesn't really know what they're doing. They're just creating, they're just drawing lines on a map. And they have no idea who lives there, the tribes that live in that land. They're just going to carve it up.
It's
And
like
that
what
doesn't
happened
seem fair.
when we divided
And
up Africa.
that
Essentially.
happened when the whole world was divided up
Yeah.
by Europeans, not just Africa.
Yeah.
So it's just kind of like it feels. What Aussie's saying is it's not a conversation. It's someone telling you what to do. And there's a different way to like parent, right? If you have the power, you should have a conversation with your child about, let's talk about the 5 things that could come out from this. And then let's go through and try to find the best, and even let them choose of the options, not just say these 37. Because I look at this list, and as I said to you guys, many of these like Filecoin, Tron, the Algorand and XRP, they had big investments in big footprints at Consensus. And so these companies overnight, I can't even imagine what's happening with these companies right now. They're scrambling. They're trying to figure out what's going to happen. Are they going to be delisted from US exchanges? Probably. It just seems like long term, this is a good thing for the industry, right? This is starting to give us clarity around, as Aussie's saying, like if you have a team or whatever, and then that makes sense. Then that's the way they want to play the game. But we always knew in the short term that regulation was going to be super rough. Even if it's a long-term win, this is just how this happens. But it's unfortunate to see these certain projects, these bigger projects, some of these projects I've never heard of, not to like minimalize them, but many of these projects have $1 billion market cap or more.
Yeah.
And I just don't see a way that this isn't going to change the industry, probably affect the market over the next 24 to 72 hours, and kind of, send a scare through some channels.
Throw some love here to Aussie. He found the link. This is all, the SEC did not name these in a specific addendum about these items. It listed these as its reasons for going after Bittrex. And going after Bittrex, it named these and a few others as examples of, look, you're selling securities, we're going after you. So it's not necessarily a de facto ruling, and it's not necessarily a direct ruling. It's like they're tangentially building the case of what is a digital security versus a digital asset, if you will. And, I hold on this list, I hold 1, 2, 3, 4, 5, 6, 7, 9 of them, 8 of them. XRP, Mana, Dash, Algo, Kick. I got Kick, which was Kin. I forget even the parent name of this thing. It was a social app from back in the day, and they made the pivot. I want to say like in 2017, it airdropped me like hundreds of thousands of these Kin at a fraction. Tron, Terra, of course, Terra USD, and Luna. I mean, I'm holding tons of this. And so what are the implications for me? But what Aussie had called out from this one article on, what is this, Blockworks, was that they would just happen to be listed as examples in the Bittrex case as to, hey, we think these are securities. And so it's almost a cheap shot by the SEC.
Oh, it's an entire cheap shot.
Because they've never actually said this is what makes a security. They're instead going at an exchange and going, well, these are kind of like securities. So, and it's like, wait, are you saying that I am a security? Oh, and here's George Pate.
XRP equals BRICS. I mean, yes, that makes sense. They're trying to move off the Swift system. It would be like for BRICS to really be able to move off the ground, they need something off the Swift system. And since XRP has essentially always positioned themselves that way, that would make sense why they're going after XRP, because XRP is likely to work with BRICS to develop their Swift competitor. So that makes sense.
It's just surprising because this is an ISO 20022 coin. So I was surprised to see it be called a security because it was supposed to be something that was the closest to being grandfathered in by the government. I mean, Hedera Hashgraph, Hedera HBAR, they were at the White House 3 or 4 months ago talking about ISO 2022. So it just kind of seems interesting. XRP equals SoftBank. Wow. I want to call out something that's happening right now, and that's Bitcoin Miami. That started yesterday
Yes.
and will go through tomorrow. And I can
Yes.
guarantee you, when people get up to talk at Bitcoin Miami, they're calling this out because one of the things that Bitcoin maxis hold sacred to themselves. So is Algorand. Yeah, Algorand was a suspected. I don't know if it was like it was supposed to be, but it wasn't in like the top whatever. It's supposed to be in ISO 22 called out. But I guarantee what's happening right now at Bitcoin Miami is all the maxis are sitting around giggling that everyone else is buying securities and they're the only one that's buying the commodity. Because when you're a maxi, you don't have to worry about this entire news conversation. It just doesn't even register. It just
Interesting.
doesn't. It doesn't even matter. So
Except it does. It does, because even if the entire industry, like they don't go after Bitcoin. It makes people leave the industry. It pulls money and momentum out of crypto. And
I
so
don't know if it pulls it out, Aussie. I'm not convinced yet. I think it pulls it into different projects.
well, I mean, it pulls it into a different project, but it does. There are some people who are like, well, okay, this thing that I didn't think was a security is a security. Well, I don't want to deal with that. I don't want to deal with trying to figure out what's a security, what's not a security, how I go about trading these. Screw it. I'm just going to pull out. I'm just going to
So
leave.
you're making the argument to just put it into Bitcoin.
But I think there's some people that are going to say they were traders. They were traders. And so they're just going to go trade at they're going to just go back to trading stocks because they don't want to deal with all of this SEC crap around Algorand and Dash and any other cryptos that might be considered securities. And they're not going to go trade they won't go trade Bitcoin because Bitcoin still has a more significant amount of manipulation that you can avoid when you're trading smaller cryptocurrencies.
Interesting. You think
There's
do you think there's too big of institutional market makers in Bitcoin? Is that what you're getting at?
yeah, there's too many institutional big market makers in Bitcoin, and if you look at, I would
Yeah,
George,
the more
I
Aussie
want a
talks, the more he sounds
miner.
like a
I would love miners.
the
Give
more he
me
talks, the
miners,
more he
and
sounds like a Bitcoin
I'll be very
maxi.
happy. I actually bought some NFTs for a couple miners, but
So
I'm really down for miners.
Aussie 2021 is when the SEC thing started, I believe 2020, I believe started with XRP, and XRP was my biggest bag at that point, and I had been holding since 2017, and it was worth a good amount of money. But the second the SEC came to play, I sold it and flipped it right into Ethereum. I didn't get out of crypto. I just went to something
Interesting.
different. If
Interesting.
over the long run, 99% of cryptocurrencies that are on coin market cap and there's 22,000, they're going to die, right? And so they're all just going to go into the ones that are going to last the longest. And I think Bitcoin and Ethereum are really starting to prove that, especially what you just said, that Ethereum can skirt the securities laws by, or the current securities, whatever we want to call it,
Yeah,
descriptions. So I guess I just don't believe that people are going to leave crypto. If you're into crypto, you don't want to deal with stocks. Crypto has unique things for traders and investors alike.
And I venture to guess that if we're just looking at, for example, this list of 37, if you are a crypto trader and you're trading like Filecoin, you're trading anything on this list, you're kind of into it more than just retail. Like you're not just a Robin Hood Wall Street bets throwing shit on the wall, see what sticks. You're probably informed about some of these projects. If
no,
you're
that is not true.
if you're investing in these nuanced projects,
No, I'm talking about traders, day traders, scalp traders, swing traders.
yeah,
They're no. I'm in way too many trading discords
they're
of
just
guys.
guessing. They're looking at ALGO and going, "Shit, I'll take it." Like they don't know anything about it.
They most of the time they know very little about the project. They look at the TA and hey, does this TA look good for this play or this play? What's Bitcoin doing? Okay, yes, I'm gonna take this play.
What size of traders are we talking about, Aussie? The ones you're talking about? Like
I mean, I know
what's
some
their
guys that are trading over $100,000 dollars
Mhm,
per
mhm.
like. I know it ranges. It ranges from like retail traders, like some guy, 20-year-old, just gambling with a little bit of his paycheck, and guys that are literally living off of the money that they trade with.
Well, I mean, I guess my point is those sorts of people that are just showing up looking at technical analysis. George loves your position here. If those sorts of traders, if I showed up into a new space and I didn't know shit from shit, I would pull up Coin Market Cap. I'd look at the top 10, the top 50, and I might do what you're saying on the top 10 or 50. But these 37, maybe half of them are in the top 50. The rest are so obscure that like you'd have to go looking for. I mean, look at this list. You'd have to go looking for. Let's look. Hydro,
Mango. I'd never heard of that.
Rary, like so. I mean, Liechtenstein Crypto Asset Exchange. So, like, I mean, my only point is that you're absolutely right. The paradigm of these traders don't care, but how they percolate what they're buying. I would think that it's not as much what's on this list. Yes, Filecoin, probably. Yes,
Filecoin,
XRP,
Mirror,
and Dash and Mirror. Yes, absolutely. There's a handful in here, the grab bag, that maybe just percolates.
BitTorrent, Luna.
But Naga? Like, what the hell is Naga? I got to go
Yeah,
research
honestly,
that.
and it almost sounds like you're making your argument for why people would stay in crypto and they don't really care about these names. Like,
They don't care about the names. It's true, but if we're talking about having other securities filings related to the fact that you're trading these
Sure.
potential securities, and this list is constantly changing,
Yeah.
they don't want to deal with the paperwork. If you go trade with your local broker on stocks, they file that paperwork for you. You're already doing all of that anyways. And so you don't have to worry about it. But as an individual trader trading on an exchange who's just trading random current cryptocurrencies, you don't want to deal with that. And so therefore you are going to move out.
have you
And
heard that from the Discords? People saying
I've
I'm going to
been
go back
talking.
to trade Tesla.
Yeah, I've actually been hearing several guys that a bunch of these cryptocurrency trading like people have all now started shifting to making calls on stocks and options a lot more, and less cryptocurrency calls, because they just don't know what their filing requirements are going to be. They've been seeing all of this random news stuff that is just like, oh, well, this is just like all of a sudden this is a security, or all these exchanges are shutting down in the U.S. The number of exchanges available to U.S. citizens now, and a lot of the traders that I know are in the U.S. are like, well, I can't trade here, I can't trade here, I can't trade here, I can't trade here. Well, screw it. I'll just go trade stocks. You can go on like Hugo's Way and trade 100 up to 1,000x. They'd rather just go do that.
Well, and you're making an interesting parallel point that I'd like to call out, and it's this. When I mention, is this good for the industry? What is going on in a trader who is willing to possibly pull liquidity out of DeFi and just go back to TradFi? Why is that? The fact that they're willing to maybe move that to an option or a stock on something in the traditional market says what they're looking for is reducing the variables that make predicting the direction of a stock more predictable. And that is, did they play nice with the SEC? And so if we're talking about the stability of this funding mechanism of crypto projects in the future, what I don't get is why we're defying the SEC. Why not just go file?
Because you're not allowed to file. We had your dramatic interpretation last Tuesday.
But
Yeah,
is that verified?
Yeah,
Yes.
there's no definitions down on digital asset, or so they can't file.
Don't file as a digital asset. File as a normal asset. That's what they're trying to arm. That's what they're trying to arm wrestle people into doing, is file as a normal security. Don't distinguish. Just show up and file. And who's done this? There was one particular company that I was impressed that they just like, no, we're just gonna go file. You know what? It was our real estate buddy, the Dow guy, Domingo.
Yeah.
Domingo just said we went Rec D, and Rec D was an official filing that says it's like an exception or an exemption to the rule, and I need to read up on it. But they just went that route. Now, is there any reason or limitations on you other than just submitting your documentation annually, doing your annual reviews, having transparent books and stuff like that, having proof of reserves, those sorts of things? Is there any reason why you just wouldn't? Like you with Bedrock Capital, why wouldn't you just go file?
We're filing in the UK. We're looking at overtime filing in the UK rather than
As
the
digital
US.
assets, though.
Yeah, as digital assets. Main reason, we talked about qualified investors on Tuesday. I have to KYC every single one of my clients then, and I can only take on 30 unqualified investors. And most of the pool of DeFi and crypto, at least especially if you're talking about real DeFi, not just DeFi as the vague term. If we're really looking at real DeFi, most of those people are not qualified investors, and you are closing the pool of potential people that you could potentially bring in, and that's why you don't want to go Rec D.
Then why? Maybe in Domingo's case, maybe he had a good contact list of qualified investors already. That could be. And
Yeah,
maybe
and
go ahead.
and I just want to, Grant, I want to make a. We're talking about two different things here. You're talking about, I think, and I want to make sure I'm understanding. Domingo, if he wants to play well with the SEC with his company, that's different than the underlying asset. He's still using USDC and Solana. That's
Correct.
different. We were talking about the chains. We were talking about the individual chains being securities or not, as opposed to his company registering however they want to register. Those are two different things, I think.
Interesting. And so yeah, there is a come to Jesus moment where someone thinks, I've been building on X, Y, and Z chain. And we think we're decentralized. We might have a board, to your point, Aussie, and that board decides the direction, but our developers are decentralized and they're only incentivized on mining, or they're only incentivized for, holding a node or something like that. So like functionally, there is very little incentive to file with the SEC, but the SEC bundles you into a lawsuit with Bittrex anyway. And so that can be very frustrating. And then the thought goes, well, why doesn't your board, even as a nonprofit, why don't we play by the existing rules? Why don't we centralize, at least in our entity format, and go ahead and file, at least in our entity format, and still operate in a decentralized way? Is there any reason to not do that, just so that if you become a target, you have resiliency? Is there any reason to not do that?
Can you give an example? Like, are you talking about for example, Algorand?
Well, I mean, and from what I understand, Algorand is relatively centralized, right? Like they have a governing board, they have a governing organization, and in their case in point, I would think they want to go the route of XRP. XRP is probably an even better example. Like, why is XRP fighting at all? Why don't they just what? I don't even know XRP's position, other than why don't we become a security?
Because if they're a security, then me, Jarrett, and anyone else who are like us and aren't qualified investors, we can't hold XRP.
Why not?
Because we're unqualified investors, and you can only have 30 of them in holding your registered security.
And this is probably a great point, because my counter, the devil's advocate in me, says holding the token does not mean you hold the stock. When you file as XRP and you do a public filing, then you suddenly go, well, stock of Ripple, and we'll call it the RIPL stock, is different than holding the XRP token. And the XRP token, do you have voting rights? Are you promised returns? No, it has a function on an ecosystem. But what I think I'm hearing you say, Aussie, is, but those terminologies, let's say that Ripple files and it issues 10 million RIPL stock, which is different than XRP tokens, and is suddenly XRP being treated as a stock and as a security itself, or is the RIPL governed stock? So what happens with the XRP token? Well, it still has a function on the marketplace, and I still have value that goes up and goes down. And I think the fear with these companies, the chicken that is being played, is that, okay, I hear this from an entity construct, Grant, but it's very risky because now we're under the governance of SEC, and now they can have their way with us, and they could suddenly say, well, you got to get rid of the XRP token, or we're going to reject your filing. And now we've got all your books, so we've got proof, and now we could take you and drag you through court. And so I could hear the dilemma of, no, give us clear definitions, like we'll show you ours once you show us yours. And then we can govern, is the token an ownership share of Ripple, or is it just a function of an ecosystem, you know? So anyways, it's a healthy debate.
And a lot of, and if you think about a lot of VCs, and I mean, I don't know a ton of VCs, but I've done, like on the show, I've talked about VCs and seeing ICO tokens. And like a lot of VCs went, I mean, not all, but especially on chains, they will, like ARB is a governance token. ARB through their VC arm would have sold ARB tokens as to these VCs in exchange for VC money. And so to say that ARB is not an ownership stake in the ARB chain would be completely false.
And disprovable easily by, once you step into the SEC's domain and their frame, it's easy to prove. And that might be true of XRP. Like all the early documentation says, this was a government's token, da-da-da-da. So it's a briar patch. And now that we've talked it through, or at least, I think by talking stuff out loud, now that we've talked it through, you're right. Like, this is not so easy as just going to file to get clean. But if I were starting a new project today that had a token, I would play clean. And I would force myself to limit my activities and my roadmap to stuff that fits within their definitions. I would do that. But that's also why I'm not starting a token project or a DeFi project, because Lord knows. But this does have tangential issues that we probably need to talk about another time, about NFTs. And, well, what the F does this mean for NFTs? And what, how does it relate if Yuga Labs wants to go straight and go legit, what does it mean for if you're holding a heavy metal? Have you seen the new collection, the heavy metal collection from Yuga?
No.
Dude, it dropped. I saw it come live on OpenSea for like 0.5 ETH. And I was like, this is the first time I've ever seen a Yuga asset for sub ETH, like, in a long ass time. And then by the end of the day, it was over 1 ETH. They airdropped a lot to current holders, but they're building out the other side world. And this is kind of like Doodles launched the Space Doodles, where you could stick your doodle through like the duplicator and it generate the Space Doodle. They were launching these, and it's HV-MTL, heavy metal. So anyways, it's for another conversation. Well, guys, this went a big different direction than I thought it would for free-for-all Fridays. Any parting thoughts before we do shout-outs and cut and run?
No, I mean, I think Friday free-for-alls are always a good time. Thanks, George, for backing me up and then adding some great friggin' context in here. So I'm going to just go straight to my shout-out to George. George, you killed it.
I guess my shout-out is to any OG navigating these murky waters of SEC regulation and crypto winter and retail haters and shitcoin season and people that are like, fuck it, I'm still building. Shout out to y'all, man, because I'd rather be a content creator. Jarrett, what do you got, man?
I don't even know. Shout out to anyone who's gonna make it through all this. It's gonna be exciting. I think if you ever want to get away from Twitter and all this social media, like there's gonna be some crazy news. There's gonna be news like this, but at the end of the day, like just hold your stuff. Continue to buy coins that you believe in. Continue to buy projects that you believe in.
Yes.
Have your investment thesis. learn as much as possible at all times, and
Yeah.
just know that everything's always in the air and there's really no absolutes. So yeah, just stay open. That's
Yeah,
all.
man.
I'm
And I guess,
tired.
folks, what'd you say?
I'm just tired. I'm just tired of all this like bullshit. It's just like just having people kind of govern things they don't understand. You know, a lot of people don't
Yes.
understand soccer, and if somebody who didn't understand soccer could change the rules, I would burn that person. Like I would like burn them down. You know, I'd be so
Who would
angry.
listen?
I would be like, this doesn't seem fair. And
Yeah.
clearly, you have people in the government that don't understand AI. They don't understand crypto. They don't
Mm,
understand a lot of things that they've been actually tasked to regulate, and that's really dangerous. And the larger implications this has for the U.S. Uh, is kind of scary.
yeah.
You know, away from my bag, away from this show. It's like we either are going to stay ahead in the race of technology, we're going to lean into discomfort, or we're not. And if we don't, other people are already leaning in, and if they lean into AI quick enough, it's going to 100x. And while
Yeah.
we're just trying to 5x, and I think we're asking the wrong questions in America right now, and that's giving
Mm.
us the wrong answers. So
I agree with that. You know, you mentioned James Cameron and Avatar, and his vision from the mid to late 90s took nearly 25 to 30 years to have the tech to build the vision. In 2000, and I posted a photo you guys might have seen. In 2004, I ideated decentralized social constructs. It was on my dream board, and I circled it on a tweet. And we were laughing about it a little bit because I had a young pup face then. And then in 2008, I saw what you are talking about, Jarrett. We're talking about this around crypto and we're talking about it around AI, but this has been the case forever, especially around the banking crisis of 2008, which we know now in hindsight ideated, Satoshi launching Bitcoin. Back then, I ideated a non-location nation for the first time. That was the premise of what State of the Spark was. Was it a business? Sure. Was it a movement? Sure. Was it a set of ideals? Absolutely. But my dream for State of the Spark is a non-location nation that no longer identifies with this. And I have never seen, and it's taken this long for the tech like DAOs, the tech like cryptocurrencies, the tech like Zoom, even. Us being friends by Zoom in three corners of the United States and in North America with Canada, our ability to connect this way, I think the technology is just now getting there for a people who are bothered enough to literally levitate off their existing layer and enter the meta layer and say we're no longer identifying with my geography. I'm now identifying with my values, I think we have the tech to do it. I think we just need to be led into that, and I think that the communities around crypto have been actually attempting to do it in not so many words. They've been doing it with their other little their little NFT ethos. We're going to focus on gaming, or we're going to focus on Wonderland and make a ton of money, or we're going to focus on Yuga Labs and be a really cool club. But I think back of all of that is the same desire. I like you guys. You like me. I like the ethos. We have different politics, but that's nearly irrelevant. Our principles are threatened right now, but they're threatened everywhere. And where do we go? What state do you move to? And it's like, dude, let's just use this technology. So I am interested to see where this will evolve us. So good call out, Jarrett. Have you read Atlas Shrugged?
no.
Dude, who is John Galt, bro? It's about time. Aussie, have you read Atlas Shrugged? My guys, we got to talk about that on some other call. I appreciate you guys. Catch us when? Catch us Tuesday.
Tuesday at 3:30.
Yeah, man. And follow us on YouTube. Like, subscribe. Follow us on Twitter. Like, subscribe. Thanks, everyone, for being here. And we'll
Bye.
catch y'all later.